Hello guys, glad to have you on board again today. Obviously we should be doing some intraday purposes today, but I mean the Fed tomorrow, so you kind of understood that this wasn't the best timing to actually do some intraday trades, especially not on equity indices. So instead I thought about doing something anyway, more in an educational purpose. I'm trying to somehow review and go at least a little bit further into detail regarding the trade I shared with you guys yesterday evening, depending where you're on the globe, right into Discord, talking about the WTI and other, I think, way you can use the strategy into some specific assets. So I'll go further in details obviously tomorrow when we're going to have to talk about volatility in the educational show. These shows are going to last way longer than today, so consider today as just a prequel or just an introduction of whatever is going to be said tomorrow. The interesting stuff is going to be tomorrow. I'll start to introduce some notions today that we're obviously going to go way beyond in terms of details tomorrow. So let's take that WTI boy. Where are you, man? Yes, here we are. So as I told you, the trade I've been taking yesterday has been made not out of usual trend channel analysis from pro indicators, and especially the framework indicator, because that's the way I think it's for beginners to easily and safely get into trading. But we also face another problem, and I don't hide myself behind doors or whatever. It's the current market conditions are not necessarily normal for multiple reasons, because most of the money inside global markets stands mostly into two major sectors, bond markets and stock markets. So the problem is the bond market is a big nasty bubble because of monetary injections, or at least there is eventually a problem surrounding the bond market, reverse yield curves and stuff like that. So this is not just pure speculation. We do have facts signaling that something doesn't go according to the usual standards. Now regarding the stock market, we're also pretty much lost as well for multiple reasons, but the most important one being, yes, we still have, at least for now, positive long-term trending on the charts, which means we still haven't reversed the two-bear market. But the problem is also we're overextending those trends and they're pretty fucking mature. So actually what we're currently trading in the medium to long-term trades is mostly ranges, and the problem is those ranges are now mature as well, which means we can figure out a structure for those range, and they are pretty much looking like expanded wedge structures on the on the SPX. We've got some bearish trends setting themselves on the German DAX, and so each individual index will have its own market structures, but the ranges are mature. So we can see the support, we can see the resistances area, and we're expecting volatility to expand because those structures are expanding volatility. And therefore, the market somehow for 6 months, I would just say probably even a little bit more than that, like probably a year from now, is looking for tighter risk management. And in that perspective, instead of using trend channel based analysis, which is the case most of the time, they're using volatility based more than anything else, which means most of the time those two tend to be pretty fucking aligned, like they really work together. You can use both trend channel or volatility. They generally will give you pretty much the same tradable areas. But recently I've seen somehow distortions introduced in here, like we fuck up trend channels, like sometimes it feels like it is on purpose. And we just get to look for volatility. I'll explain all of this in detail tomorrow. But there is a reason behind that, and at least as long as this is still at play, and I never thought it would last that long, but reality is I need to face reality, we're still trading those distortions. So I think even if that doesn't mean it cannot change and restore and return back to normal in just a few weeks. Until further notice, I'll teach you how to profit either from the Bollinger Bands or the trend channels in appropriate market contexts. So I wouldn't like to anticipate stuff and tell you or give you any trade prior than giving you the actual information surrounding the indicators you might be using. So most of you guys don't even know Bollinger Bands or how they actually work, what they truly represent and stuff like that. So that's why I wanted to get you guys the information first rather than sharing trades using Bollinger Bands. I failed on that because yesterday I thought it was a good example to introduce a first trade with Bollinger Bands. I've done that with the WTI in a very short-term time frame. I'll explain that trade right here, right now. So what I've done is basically, as you can see, if you switch, so in here's a beautiful example. As you can see, previously it was working pretty much great, but at some point volatility can impact the market. So WTI was definitely playing along the game. As you can see, anytime we try to fuck up the context channels, we get to overextend. You can see markets stop breaking. God damn it. Break targets, suggesting probably a range is setting itself, all right, 2 times in a row. So in here, first range boundaries, second, third, really a classical range structure. And this one, as the range is mature, volatility is rising. Does that even mean the range is obviously going to break up? No, that doesn't mean any such thing. All it means right now is that the market is looking forward for breaking that range, but is it going to succeed? That doesn't necessarily mean a yes. And this is why you need, in those conditions, especially because recently we've been burst with a catalyst, you might want to use the Bollinger Bands in here. When the market gets volatile and indecisive, it generally means when you don't know, remember that what I told you, professionals never know what the fuck is gonna happen. They always risk manage, but when they see the risk increasing to such ununderstandable level, they generally tend to use standard deviation. I'll explain about it tomorrow. It will be way clearer for you when you figure out why people use these things. It's not just because you heard about Bollinger Bands, they look great, so let's use that. No, they really are meaning something and on multiple purposes. Just like trend channels mean something, all right? Don't think that Bollinger Bands replace trend channel. Like I said, they both work together and they can both be efficient in their own way. And if you want to be more efficient into trading, especially the yellow guys or orange guys, then you can actually combine the two. Not in the same time. You cannot combine both a trend channel and a volatility analysis. Like I said, most of the time they'll highlight the same area. But in some specific cases, when market gets nervous, you might want to think about using volatility on those markets to trigger your trades instead of trend channels. Because in here, as you can see, we switch to volatility and somehow the highlighted area gets pretty significantly different. We can still see the previous 2 bottoms, definitely not this resistance, but in here it means something. Like I said, in a trend-based analysis, the technical area was in here. As you can see, this is where you got the trend lines, whatever, and we fucked this area. But instead of trending like there was nothing, we fail on volatility limitations, which is important. This is why I wanted to trade this area yesterday. Obviously, as usual and as my usual standards, I'm an aggressive trader, though I'm getting to lower time frames to pick up a more aggressive risk entry. Simply to have bigger position sizing without increasing the risk. Though, this is where I gave you this trade. To be precise, oh, sorry, wrong button. To be precise, I think it was, yeah, it was 7:30 or 7 p.m. and a half. Yeah, if my memory's right, might have been in here because that's approximately the price I've got. Or in here, I don't remember. Anyway, so this area, close to a minute or whatever. Remember that I told you to enter in here, not just because, all right, that's a given trade. No trade is like that. There's always risk, and we need to manage this. So we get to standard deviation. Remember that this is 2 standard deviation and 2.5. I'll explain tomorrow as well. So don't mind me, I'm just scratching the surface today. So obviously, you don't sell just because of a fucking Bollinger Band. It just doesn't mean any fucking thing more than you just reaching to standard deviations. Great. But that's no more. You cannot just trade because of that. You need risk limitations. So in here, what is the amount of risk limitations you had? Let's just replay to those bars. All right. What type of risk limitation can you see there? Wait for the indicators to plot. Just move a bit down. All right, so you're getting to standard deviations. They're closing, which means the volatility is reducing. All right, burst of volatility and volatility contraction. You get to bullish standard deviations. Still, what do you get in here? Breakout targets confirmed by a red candle or a red triangle and a divergent signal. That's definitely not the best case scenario. All right, it's not an exit. It's not. All right, it's just you've got a tight risk limitation in here, but still something that you can take, which means I haven't been taking a huge position sizing, obviously. It's just a tiny speculative trade. I don't nearly think we're going to reverse right now. I think the best we can hope for is to reach out to this opposite Bollinger Band, which will give me a trade managed. Like I'm selling in here, I'm targeting possibly to get to this Bollinger Band, in which I'll profit take, pay for my fucking stop loss, and just let it go. And afterwards, either this market sets a bullish trend and it will go higher, or it will reverse, like getting in here and attacking this area again. I don't know. All I can tell is that I'll have a trade, I'll have a tiny gain with low risk, and possibly even a swing trade paid. So that's all, the only thing I care about. I'm not caring about catching a reversal or whatever. I'll just sow an opportunity with a limited amount of risk to take this trade. Now, what I told you is that I've been waiting for 3 weeks to actually go real public regarding these things for a simple reason. I mean, I'm teaching you trading and I consider myself just like being your father or whatever. I want to protect you, so I don't push you towards something new to you without testing it myself, making sure that you've got the ground rules and you've got the boundaries, you've got the limits. Then you do whatever the fuck you want. It's just I teach you the rules and then it's up to you to choose whether to follow them or not. You know that when you cross those boundaries, something ugly can happen, all right? But still, if you want to test for yourself, then go ahead. Like I said, sometimes people need to make mistakes to figure something out. So if you're that kind of person, I'm not going to force you not doing mistakes. Just go ahead, make mistakes. But when you do know that you work like that, then please make fucking sure you don't use leverage when you try those things. Right? Just limit your fucking personal risk. It's simple as that, right? You know you're trying everything, and even when someone tells you not to go there, then you're just going there to see for yourself. And that's great. At some point, I think that's both positive and negative. Just make sure you benefit from the positive and you don't take so much impact from the negative. The positive is that you don't trust any fucking one, and that's great. That's really a good point in trading, to not fully trust someone. But that also brings negative impacts, which means sometimes you'd rather have liked to listen to someone else rather than losing a shit ton of money just to figure out that this person actually was right. All right, so like I said, I totally respect both ways to react to those warnings I give you, but if you take the risks, and just make sure that, I mean, at some point, if you followed me for a little while, you might have figured out that anytime I give you something, you might want to fight it, but any fucking way, I get to be proven right later. So you tend to figure out, oh, damn it, it was right again. So at some point, test things for yourself. It's really important. If you are like that, don't try to change. But still, make sure that when you know you're getting against a warning I gave you, then do it with a tiny position sizing. It should be like a natural reaction. All right, Phil warned me about it. I'm going to do it any fucking way. But dividing the position sizing by 2, right? Which means if it goes well, then fine. You still have fought my lessons and you'll figure it out probably sooner rather than later, but anyway. And otherwise, if it goes wrong, then at least you just had, it's just like a little scratch, right? You're not going to the hospital just for it. All right? It's really important for you to figure this one out. So anyway, the risk management, like I told you, is easy actually. I wanted to review that for multiple weeks to make sure it actually works. I thought it would be, all right, because I know my strategy and I know these two things are pretty much compatible, but still, I wanted to test on my own rather than pushing you ahead of something I couldn't verify first. So yes, the risk management is definitely working pretty much the same. So consider the context boxes as the context volatility limitations. You cannot use the context boxes rules like when they're unfolding and stuff like that. I already told you about that. The problem with Bollinger Bands, they bring better risk limitation, but they are far less useful for context identification. This is why, if you want to identify the fucking context, you rather want to use the context boxes of trend channels instead of using volatility. But when the market gets freakingly crazy, then volatility gets pretty much more efficient. All right? So pros and cons, it's not, nothing is better for every reason. There is always pros and cons, and you need to figure those one out. So risk management, you get into your trading here. Where's the validation level? Reaching out to the opposite trend channel, which is in here, the opposite lower time frame Bollinger Band. So this is where you reached out to validation in that precise moment, right? So in here, what do? Your first limitation, you take your PDF piece of paper that I hope you've been printing so far, and you use the classical neutral range risk management. So what the hell do I do right now? Pure and simply, as I'm a very aggressive trader, validation, I don't nearly give a shit, I do nothing. At the confirmation, whenever I break down the 50% context with candle closes, so whenever we'll get to close below that level, probably sooner rather than later, I'll be able to confirm my trade, which means so far my stop loss is at the market top, because that's what I do on validations, all right? And upon confirmation, I'll do this, putting it at break even, and then the market will have two choices. But I will have a single option: losing, nothing, or making a gain. I got them like those kinds of situations, because in those situations, I don't nearly give a shit about what's going to happen. I just know anyway it's a positive outcome. I mean, losing a gain, which means basically exiting at break even, that doesn't nearly impact me. Like, to me, it's nothing. So I tried and I didn't fail, so that's great. Or I'll try and I'll succeed, that's really great, because I'll have a swing trade for free. As simple as that, all right? If we get to confirm, like I said, I might eventually take a profit, partial profit on the lowest Bollinger Band. I'll probably will. At least there is a mandatory profit taking for me at the 76% fib. Remember, these are the limitation rules for a range, a neutral range. But as I told you, I'm also trading the 4-hour context reversal area. So I'm going to keep at least 50% of this trade for a longer prospective potential reversal. I don't really think we might reverse today, but we could, and I don't know. And if we do, then I'll have a very nice trade. If I don't, then I simply will lose 50% of my trade. That's up to you. This is risk management. The more aggressive you are, obviously, when trend triggers, the more profitable you will be. The problem is, obviously, recently, I haven't been the most profitable trader of the place for simple reasons. I've been aggressive in a range. So, obviously, I lost most of my gains because I was hoping for trends that never, ever fucking managed to trigger. But it will sooner or later, all right? Oh, hopefully in my side. And it can obviously trigger on the opposite direction. And in that perspective, I'll probably make a fucking flat 2019 year. It can happen. I'm totally aware of it. And I stand on this. That doesn't nearly change anything to me. That will be probably the first year ever I ever worked for fucking making no money. But still, that's part of the job, all right? If I get proven wrong, I'll get proven wrong. I would have still been taught a very important lesson. Like I told you, it's the first time ever I'm trading a potential end of economic cycle reversal. So I'm discovering those stuff as well, all right? So I'm learning as well. I'm being taught some very tough lessons right now as well, right? So if I can be taught those lessons without losses, I'm totally fucking fine with that. All right. Anyway, so that's a topic for another day. So I'm going to leave you guys with that. So risk limitation is always done for the validation. Risk right now is pretty limited. I mean, getting in here taking a loss in here. I think I priced that loss in. I think at that stage, if the market decides to reverse straight line to get to take down my stop loss, I think I approximately take like $50 loss or something like that, which is 0.1% capital. Because in here, remember the initial stop loss was 65, now it's down to the market top, and in probably a few minutes, I'll probably be at break even. So, all right, as long as I am break even, I'll be fine. So far, we're just hesitating, all right? That's how it is. Still a little bit of risk right now, but probably no more than $50 for me, which is literally nothing. Anyway, see you guys tomorrow for much more detail about those duality use of trend channel and Bollinger Bands and stuff like that. All right, we'll do it live actually. So I don't yet have figured out an actual proper timing to do so. So normally I do take care of it in like 2 p.m. in European time frame, so it's God damn it, it's EST +2, I think, something like that. So you guys use your own time zone, whatever, to figure out what time does that make for you. And I'll see you guys tomorrow. Obviously, if you can't make it, but if you still have questions that you might want to have answers from surrounding that topic, obviously, then you can send them into Discord or refer them to any moderator or whatever, and they'll ask them tomorrow for you. Bye, guys.